Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Not bad. We're going to have it done on Saturday here, which is nice for people that want to prepare a little better. But we don't have the futures open, so we won't know what the Sunday night futures are doing. But anyway, um, we're also Dave and I were also discussing to add some video, meaning that you'll be able to listen as well as see. So that we'll plan that for next time we meet. But for today, it's still audio. So it's nice to show and tell, don't you think?
Yeah, because
Dave,
otherwise we talk
nice
about
to show.
levels and numbers and people can't see it.
Yeah. So we'll come up with something a little better there. Anyway, it's been an interesting week. We had quite a few events this week, right? We started off on Monday, and that was kind of a bit of a follow through from the Friday little rally we had, and then kind of seemed to start on an up note. And it was, the first full week of Friday, and so we had turn of the month seasonality, so Monday, and then we had Friday, first Friday as well. So, but going forward, as you mentioned before the call here, that there's not a lot of seasonality data this next week, so we got a bit of a lull on that until we get into mid-month seasonality. But anyway, let's just go and review a little bit of how we ended up through this week. So we had a lot of the bigger stocks on Monday, like Amazon, Alphabet, all that from the week before, they kind of rolled over and they were weaker. And bank stocks were also quite weak. Regionals were quite weak. And we had some PMI data, construction spending, ISM, and stuff like that. And then Tuesday we had some economic concerns just about the economy slowing down, and so we had this sell-off. So we ended up kind of starting okay, and then by the end of the day it was selling off pretty good, which led us into Friday, where we had FOMC policy decision, and we got our 25 basis point hike, which was expected, right, Dave? That was pretty much in the cards. But the market didn't really like the Q&A period that much, because volatility hit again as the Q&A started at 2:30 Eastern time, and then we sold off in the afternoon quite significantly. And then Thursday, we followed through, and these regional banks were getting smoked pretty good. And then we had Friday, we came in with the, unemployment numbers and things like that. And basically the takeaway was interesting, because it seems to me that the Fed is probably going to still have a few more hikes. So where the market was kind of positioning itself for cuts later in the year. And to some degree, the Fed forecasting tool from the CME still suggests that. But with the unemployment, like, they're not getting the unemployment to where they'd like, but it shows that the economy is strong, and still strong after 9 rate hikes we've had. So I think that the general take on that is, well, we're going to be okay. We're not going to go into that bigger, deeper recession that was the fear before. So I think that's why the market's gotten through the Fed week here with a rally that closed out the week. We didn't get back to the high of Monday or anything like that, but we certainly had a good rally. What contributing factors? Apple's earnings were good, right?
Mm-hmm. Yeah,
Apple was up significantly, and then we had banks come roaring back on Friday. I mean, some of these numbers are massive. Now, remember, if something goes down 50%, it takes 100% to get back to where it started, right?
Yep.
So these numbers sound huge, but of course, consider where they all came from. Pac West was up 81.7% on Friday.
In one day.
Right. Western Alliance was up 49.2. So KRE, which is the regional bank ETF, one of them, that was up 6.3%. We had Microsoft, hit a new 52-week high. That's pretty good considering all the things that have happened in this last year. Microsoft hitting a brand new 52-week high. Of course, we know what's fueling a lot of that is the AI situation, and they're still one of the stronger companies out there, which is we've seen such interesting in these companies that have been around for a long time. Some of them they lose their edge, and Microsoft has managed to stay in the mix and actually continue to come up with new things and stay relevant, right?
Mm-hmm.
I mean, we all use their software. We can't get away from it, it seems. And now with the Chat GPT and other things that are all going on, it's very interesting to watch that company. Anywho, so let's look at year to date. This is a Friday's close. The Nasdaq's up 16.9, S&P's up 7.7, Dow's up 1.6, Midcap's up 1.3, and the Russell is down 0.1 year to date still. So that's interesting. So there we have it. That's the Cinco de Mayo closeout. And now we have the 6th of May. We had a coronation, and we got Canada's going to have the king on our money there. So just so you know. And a good friend of mine actually grew up with him, and he was his band played at our wedding when my wife and I got married. But anyway, he was singing at the Royal Albert venue there for the coronation promenade, or whatever they call it, prom. So he was singing there, so that was pretty cool. Really neat guy. Brian Dirksen is his name. So I think he did about 4 or 5 songs or something. So pretty cool. He's just lives about 20 minutes from me here. So anywho, in other news, let's focus on the heat map here. I'll just do the 1 week first. So the 1 week, Microsoft was up 1.1%, Apple up 2.29%, Nvidia 3.35%, Tesla 3.5%. Down, Meta was down for the week, 3.14%. It had its good week the week before, right? And Google as well, down 1.65%. And Exxon for the week was down 8.16%. Chevron down 4.96%. So big moves there. And last Friday, Exxon and Chevron both had a move, right? But then this week they were down huge, and the whole oil patch was down, except for Friday. So when we roll to the 1 day performance, Exxon was up 2.49 on Friday, Chevron was up 2.55, and Apple was up 4.69, Microsoft 1.72, Tesla 5.5. So that was just Friday's action. So and when you couple that with what happened for the week, it's quite amazing what we saw on Friday. And going to the groups. So for the day, energy was up 3.14, is a leader on Friday. Financials were next at 2.52, tech 2.46, and leading or lagging the most was the consumer defensive, was down the most, was up but lagging, and then utilities next, and so on. But for the week, technology was up the most, 0.69, healthcare 0.59, utilities 0.44, and at the bottom was energy 4.18. So isn't that amazing, Dave? Like think about, for the one day we had energy up 3.14, but still for the week it was down 4.18%. So pretty significant there.
It was just
Financials were down too.
The Friday was just really huge performance.
It was, and so the consideration is like how much stock do we put in Friday's move? So Wednesday we kind of tapered off with the Q&A period. Thursday we had significant follow through on the negative side after Wednesday, and then Friday was the turnaround day, and it was substantial. But how much weight do we give Friday? Right, for planning for next week? Well, you had the thought when we talked about this before was we kind of came back to the midpoint on the S&P, right? So not really making a new high or anything like that relative to the week before. We didn't close on the high this week, so it might have just been a relief rally, short covering rally. There could be something else over the weekend here that still triggers some negative sentiment. Could be economic, could be geopolitical, could be war, could be the end of the world. Right? It's these days are kind of like, if you don't like today, well, just wait till tomorrow. It'll be something different. We've been kind of going back and forth like that. So why don't you rattle off what economic things do we have to look forward to this week, and what might the market be concerned about? And we also have a lot of earnings too.
Yeah. So in terms of economic reports and Fed speak, Monday we have wholesale inventories. Tuesday we have some Federal Reserve Governor speaking, Phillips. And Wednesday we have some actual data, Consumer Price Index, Core CPI. Thursday we have Producer Price Index, Core PPI, some jobless claims, and then Friday is Import Price Index. So the theme for this week will be how prices are doing, right? So this will give us color as to inflation. Is it still declining? Is it stabilizing? Is it going to go back up? So I think this will shed some light as to how inflation is doing. And that's the major theme for the week. In terms of earnings, there's still a lot of earnings, many different sectors coming out this week. Some of the notable ones are PayPal on Monday. Monday also has things like 3D Systems, Devon Energy, KKR, and it's just a lot, Western Digital. Tuesday, we have Airbnb. That could give some idea of how travel is holding up. We also have a lot of energy stocks, H&R Block, Jacobs Engineering. So industrials, energy, just a lot on Tuesday. Wednesday, we have Disney. That's a big one. So that'll affect the Dow. Again, and this many stocks on throughout the week. And then Thursday, the same thing. CRISPR, CRSP, that's in your ARK funds. So it's not just, it's just all across the board, many sectors. So that's why I posted it in our group chat. So that's that. And seasonality, it's a little bit too early for mid-month seasonality, but I think we start on Friday with the first day of it. And this month is expected to have a robust mid-month seasonality for the S&P 500, especially the Russell, and then Qs are strong as well. So I think next week we'll cover that, but it may start as early as this Friday. Yeah, that's in terms of the almanac, that's what I have.
Okay. It's interesting looking at the cross section of the 11 sector ETFs. Just looking at performance for the week, the month, the quarter, year to date. And it's interesting because healthcare and utilities still pretty good on the month and even on the week, but you saw massive disruption in the financials. Really bad year so far on energy, XLE, down 8.28% year to date. And what's been the surprise is, I think Meta and the communications sector. There were some other stocks in the communications that were pretty strong too. That's up 21.55% year to date. That's the strongest. 21.54 for XLK. So wonder about the basic materials. It's again tied to the dollar a lot. So let's take a look at where we stand with the US buck here. So now that we've had that interest rate hike last week, Wednesday, we actually pushed down once, you know, it was announced. It sort of pushed down, and then we closed out the week kind of on a sideways note here. But I would say that the market's probably looking for a little bit more leniency on this rate hike thing. So I would still say that from a rate hike perspective, I think the dollar will stay in its general area, if not decline a little further, right?
Mhm.
And so that might help our metals. Now, gold had a really bad day on Friday, but on Thursday, did you notice what it did? It popped above the 2050 area, quite severe, and then pulled back. So, I like the prospects for gold only because we've got this debt ceiling problem still. We have, you know, every crook and cranny asking for handouts for money. Money's going out the door like, there's no tomorrow, which there might not be tomorrow. That's funny, right? Like money's going out the door like there's no tomorrow.
Yeah.
Yeah. So there's a lot of expenditure pressure on the buck, and that might help gold, continue to stay elevated here. So even though it had a bad day on Friday, I would say we still should stay fairly positive on the metals. And bonds, what are they signaling, Dave? They're kind of still in that range that we've had since mid-March. Like we're right smack in that range. Haven't been able to break out of it either way. So just kind of choppy. And energy is kind of a surprising thing. We really had a low set on Thursday when the market melted down on Thursday. Energy went with it, which is why it made the entire week so bad. But on Friday we had a really good day. When you look at go take a look, David, at a chart of crude there, West Texas. It's not quite a hammer, but that candle that we had there, it penetrated below the March low, and then it retraced and closed almost where it had opened. And then the next day we built on that. So I wonder if that was a bit of capitulation. We did have some elevated volume on the sell-off, and not bad volume on that hammer-like bar. So it may have found another bottom temporarily. So I would probably lean a little bit more to giving energy some room to come back. So if I was looking at mean reversion for what happened last week, I would give an upside allowance to oil this week. Would that be reasonable?
Yeah, looks totally reasonable.
Okay, just that upside allowance for it, right? So let's give the basic materials a little bit of allowance. Let's give energy some allowance. Financials did roar back, but I mean they're kind of so sketchy still that I don't trust them too much. Healthcare has been green, all year and stuff, and it's pretty reliable overall. It gets a little bit dicier when you get into the Russell 2000 biotechs. Biotechs are, you can knock it out of the park, or they can, the ship can sink. It's one of those areas. Not as stable as, of course, your Johnson and Johnsons and Merck's and healthcare stocks like that. So there is a difference. When we say healthcare, it includes the biotechs, but there's a big difference between small cap biotechs and a company like Johnson and Johnson. So industrials and healthcare, kind of your midpoint stuff that hangs in there, and technology, of course, and discretionary, more sensitive to the sentiment that's out there, like how we come in and start the week and what people are thinking. So let's just take a look at our indices here again. So looks like NASDAQ is the strongest of them all since we closed at the top of the range for the week there. It does, I don't know if I would lean on that as resistance. I mean, I think it's possible to say it needs to firmly break above that before we're committed. But if the sentiment is there and it's a risk on, it could easily build on what it did on Friday. Russell had a good day too, but it's still way down, in its performance from everything else. Obviously, we mentioned that earlier, 0.1% down for the year, where NASDAQ and the techs are all up handsomely for the year. So I wouldn't get too excited about Russell, and it might be something where it's a summer rally, where the small caps shine then after the Russell rebalance. It's potentially when things come in. It may start earlier than that. I don't know. It could start in June when they release the Russell rebalance preliminary lists and stuff. We could maybe see the Russell come into more focus, but right now it's a bit weaker than the other markets. So anything left on your agenda here?
No, I'm just looking at the S&P 500, which are the best performers year to date. Of course, NVIDIA is the first one, right? 96%. But the fourth one is GE, General Electric. It's usually a boring stock. It's up 53% year to date. And that's kind of a surprise.
What does GE got going for it that's turned it around like that?
And also GE Healthcare is up 35%. So it's industrial. I mean,
it's just the chart over the years.
Chart looks like just a straight line, smooth and steady up. Like there's nothing else going wrong in the world.
Well, you're right about that. It's very interesting. So, for trend traders, that's something that they could buy on pullbacks, I guess. Don't know when the party's going to end. Looking at the financials on it, the PE currently is sitting at 14.65, but the forward PE is 25.07. So it's got a lot riding on EPS this year, and even the next year and the next 5 years. It's got a fair amount riding on that. The book value on it is 29.06. It's currently sitting at $100, right? So price to book is 3.45. It's a different company than it was, 20 years ago, though. I mean, it spun off financials, it's healthcare, things like that. So it's a very different company. I'd like to take a closer look at what is really going on in that whole. It's not a stock that I've spent much time digging into myself.
No, I usually think of it as a boring stock, right? And here it is.
Well, on that note, haven't we said boring is beautiful, right?
Yeah, but 53% year to date. It's barely May for GE.
I want to mention, sometimes if, let's say a trader is struggling and, wants to sort of rectify their situation, one approach, is to just take one stock and really focus on becoming like a surrogate specialist in it. And I know people that, have traded just one stock like GE before, and they become very, very good. They know when it's business as usual or when it's not, when it's abnormal or normal.
Mm-hmm.
They know the stock. They get really well. mean, even Dennis Dick, for example, you know, for many, many years, one of his go-to stocks that he traded every day pretty much was Johnson and Johnson. So I just recommend that if that's something you need to do to change your situation, just to focus literally on one stock and become super in like intuitive, which is a product of experience and a product of following your rules and stuff like that. But then do it. You owe it to yourself to change your situation. So if you're struggling, that might be one idea. And I would definitely pick something that's more boring than something that's crazy, right? Okay. All right.
Good.
We'll let you go with that. Thanks, Dave. Appreciate it.
All right. Good luck. Thanks.